TBAE, celebrating 15 years of leadership.
I also want to use this occasion for you to sort of assess what you've seen of government policy so far and tell me whether that's going to be the big game changer for India this year. Yes, we had a great election last year. We had a majority government come in. We've had a man that so many people in the country have pinned their hopes on. The flip side of that is key man risk, I know, which everybody's been talking about for the last several months. We've had good news on the crude oil front. We've had good news on the inflation front. We're looking better than the rest of the world is. What can be game-changing in 2015 that changes your outlook on equity markets as well?
Well, I think equity markets have already assumed a lot of good stuff happening, right? They have, as they should, right? Equity markets are, for the last several months, anybody who said to me, aren't they running ahead? Yeah, but that's the animal, right? It always runs a bit ahead, and for good effect, because it actually can provide the right environment for people to raise capital. So I see nothing wrong in that. I just think there was certain pullback that was necessary because you were hitting some good levels, good targets. There is the Delhi election that's coming up. That could be a bit interesting. I think we just have to see that it doesn't lead to a lot of populist measures. That is my concern. Not that Delhi itself is very big in terms of overall parliament, but we just don't want the government to go back on all these strong, tough measures that they're taking. And the global landscape is just not very healthy. Like I said, the panic in the bond market. So for a lot of good reasons, and the earnings, as you were saying yourself, those have come out slightly softer. So I think some settling down, some digesting of the big move up is probably makes sense. What else can they do? I just hope they stick to this burst of energy that we saw over the last 3 months. Just saying, fine, if you're going to be obstructionists, we will do the ordinance round. We will call a joint session of parliament. I would be really happy if they do this internal Marshall Plan kind of a thing that I was talking about. I just think the Prime Minister seems to have a lot of energy, and he seems to not care what the status quo says. And if he does that on some of these big initiatives, I think people will cheer for that. So, on the other hand, if we slip into a lot of populist measures, and Bihar elections will be at the end of the year, and if there is a setback in Delhi and the wrong lesson gets taken away that you have to give a lot of freebies, free electricity, free water, free housing to everyone, that's the kind of stuff that spooks the bond market.
So you're saying that if he just continued with the same momentum as he's shown in the last 3 months, that would be enough to keep the global fund flow coming into India, given all the other good things about India at this point in time, is, especially the 7.5% rates, etc. That fund flows will be incrementally better this year than last year, substantially better given how the rest of the world is looking. What's your take on that?
I don't know about substantially better. Yeah, a lot will depend on what the rest of the world is doing. If there is a sudden, if the Federal Reserve somehow can tighten by June, which is what they were saying a few months ago,
but
which looks unlikely,
moved away from that totally,
which looks unlikely.
Yeah, so.
If you look at the Fed funds futures market, this looks more like a January 2016 event now.
Look at the 10-year yield, which is, showing no signs of expecting a rate hike anytime soon.
So, but if for some reason an earlier hike took place, like if payrolls are very strong and other data comes out really, really strong, then the inflows may not be as large. Then there will be opportunities within US. I actually feel we're at a point, and this will be a controversial view, where zero rates are not really doing a lot for even the advanced economies. And some unusual thinking has to be done. Some unconventional thinking has to be done and thought of, that whether this medicine is paying off after so many years of putting the patient on it. And maybe some positive returns, some positive yields actually may incentivize some better savings, some better investment opportunities. So I don't think people make a decision between 0% interest rate and minus 50 basis points, say, okay, I'll go put up that plant because now it's minus 50 basis points. I mean, in any case, their cost of funding will still be, let's say, 2% versus 2.5%. But I just don't think that is doing its trick, and they need to do something different. But anyway, coming back to your original question, how much inflows? We'll still get good inflows. How much we get will be very much dependent.
I'm not trying to pin you down to numbers, but I know that your in-house view is a 2015 year-end target of some 33,000 on the Sensex, 9,850 on the Nifty, and I don't know if you've revised that in the time since I've read this note, but we're already near those levels, right? Especially on the Nifty, we've been to that level and come back, not 98.50, but we're near 9,000 levels.
Well, we were about 10%, still 10% short of that, right? We got to 9,000.
Would you revise this at this point in time if you're expecting that fund flows will definitely be better, and that given the restricted opportunities in debt, some of that will then find its way into equity? So equity will be a better year this year.
I don't think fund managers overseas are necessarily thinking them as competition to each other. If they like India, they'll come to India, and if they like Indian equities, they'll come to Indian equities. It's not going to be just based on whether there's debt limits outstanding or not. Our strategist, I think these targets are decent, sensible targets. I don't think there's any reason to change them now, but they are kind of independent, and so I don't want to speak for our research wing, but I think these are sensible targets. At this point, there's probably no reason to change them. There was some cautionary note from them that earnings are slightly weak, but we hope that this is just a temporary blip down, and the entrepreneurial spirit again will come back, and we will hit these targets by the end of the year.
Is your investment strategy base case for this year any different from last year?
I know that our strategists, again, that they were most bullish on banks because they thought the interest rate cycle obviously would come off.
So that's fairly common across the board in that sense.
I don't know if that
has
changed very dramatically.
So you're saying, Pankaj, then you think the biggest challenge will be how the RBI deals with this little carousel that's going around, right? On the one hand, all of last year we were worried about what a Fed rate hike would mean in terms of outflows, and now you're saying, look, they need to be equally worried about hot inflows.
Yeah, I think
that you're saying is the biggest challenge facing the country at this point.
Firstly, actually, I don't know if this is necessarily hot, but I think they don't need to change. They need to worry about a slightly different set of things now. They'll need to worry about if many central banks are easing, many central banks are happy to see their currencies weaken. Where does that leave us? And there will be a lot of pressure on them from the industry to weaken the rupee. And I hope a lot of heavy analysis is done before we weaken the rupee too much, because just like we are reticent to use our reserves to appreciate the currency whenever in times of attack, or defend our currency in the times of attack, even to weaken it, I think let's just be very sure that this is really what we want to do. But the challenges will come from that side rather than huge outflows and high inflation, which is the kind of battles we've been fighting for the last 2 years. And I think this will be a very different set of battles. And I don't think all the money that comes into India is hot. Even in 2013, throughout the year, equity actually was remarkably stable. Equity flows were remarkably stable. Even debt outflows, it was only in the month of June, I think, that you had some substantial debt outflows. And frankly,
that was after Bernanke's commentary. Right?
It was after Bernanke's commentary. Until the day, I studied this in a lot of detail, until the time that RBI raised, under the previous regime, raised interest rates, first by 100 basis points, then by another 200 basis points, our currency was just as weak as most other emerging market currencies till July 15th. If you go from May 29th to July 15th of 2013, our currency was broadly down 2.5%, just like many other emerging market currencies. It's after we started doing our dramatic 100 basis points, 300 basis point stuff, that actually our currency got knocked down really badly.
That's always the case. Sign of nervousness in a marketplace.
My view is that we kind of shot ourselves in the foot.
Okay, so what you're essentially telling me, to sort of summarize this, is the big sort of event to watch for is the outcome of this negative yield competitive force that's going on globally, and in India is the kind of innovation the government will bring to the table when it comes to resurrecting public spending. Those are the two big things that you'll be watching for in 2015, given where we sit right now.
That's right. And obviously how the RBI is going to react to that first set.
Yeah, any words of advice to Governor Rajan on how he should deal with, what would you expect him to do through the course of 2015?
Governor Rajan was I was a student in a sense at MIT Sloan School when he was teaching the finance course with Professor Stumeyer. So far be it for me to offer any advice to him. He's a smart man.
All right, we'll leave it there, Pankaj. Thank you so much for joining us and sharing your thoughts with us. And we hope to have you back quickly, soon after the budget, hopefully, to give us a sense of what you make of the government's innovative abilities.
Sure.
Thanks very much.
Good to be here. Thank you.
Thank you. With that, thanks very much for watching.
CNBC TV 18, celebrating 15 years of leadership.